Welcome to AIBC TV, and today I'm speaking to Gordon Einstein, who's joining us from LA. Today we're going to be talking about cryptocurrency value. We're going to be talking about locking away your Bitcoin, and we're also going to be talking about mining and breaking that topic down to kind of the easy understanding for those that are like me, finding the whole crypto, the whole Bitcoin, the whole blockchain just a little bit challenging. Before we get going, let's just say hi. Hi, Gordon. How are you? Happy New Year.
Happy New Year. Happy 2021. I'm thrilled to be seeing you. Thrilled to be back on the interview circuit with you. And yeah, you know, it's 5 a.m. here and it's dark outside, but for you, I'm energized. I'll do this. I'll do this. I'm on. I got my tea. I got my cat. Life is good.
Oh, Gordon, that sounds fantastic. And it's really, really good to see you and looking so well. And we'll talk about that a little bit later on. But right now, I want to jump straight into this. We're talking about crypto. Let's start off with this. Let's kick off with this. Crypto is now the world's fifth most circulated currency by value. And a week into the new year, the market value of the world's cryptocurrencies surpassed $1 trillion. And the record came at the end of this supercharged 6-month run. And at the end of June, the value of all digital currencies only added up to $260 billion. This is massive. Now, we talked... Yes, only.
I could do some nice shopping with $260 billion.
When you go on that trip, can I come with you?
Oh, absolutely. You're the point of the trip.
Let's arrange it. We saw a 4 times increase in the value of the currency. Now, last time we spoke, Gordon, we were talking about the value of crypto skyrocketing, and it was largely attributed to the announcement of the vaccine and also Biden winning the election. And these are the sort of things that people were talking about in the media. But that does not account for the value of crypto increasing 4 times what it was 6 months ago. So what's happened? Why is this happening?
Well, I'll give you 2 thoughts. The first one is, unlike, say, stock in a company, there's no Bitcoin management company. There's no Bitcoin CEO that we can go talk to and get an explanation about why it's up or down. It kind of does whatever the market says it's going to do. And then all of us stand around like sort of shamans saying this is what the gods intended. This is what it means that, you know, the skies are dark today. So, you know, it's like man and woman try to explain it and Bitcoin laughs. It just does what it does. So I think, you know, we can make some observations, but it's worth keeping in mind the fundamentally anarchic, chaotic nature of this thing and just appreciating it for what it is. It's kind of got a mind of its own, which is one of the fascinating things about it. You know, it's so cliched how some stuff happens. Like it was just at 40,000 US dollars. Then it went from, like, you know, 13 or 15 up to 40, right? And then it went down to 32, and now it's back up to 38. It went down to 32. It was like, Bitcoin is crashing.
Yeah.
It's crashing. It's down 25%. It's all gonna die. And I'm like, you know, I've seen this movie so many freaking times where it goes up and it goes down a little bit and everyone's crashing. You know, it's like, I don't know, you know, these journalists need to come up with a better word, like, yeah, it just had a huge run and then retrenched a little bit and then it went. It's
and retrenched is a great word, but when last time we spoke, we were talking about the fact that experts were advising that this retrench was going to happen. They were saying, you know, be careful if you're getting into crypto on a short-term basis, if it's just to make money and scoot, then this is not necessarily a stable time. Is it stable?
Absolutely not, but don't expect it to be. And volatility is your friend. If you're, you know, it's the market's back at the point where all my friends who I told to buy Bitcoin a few years ago are coming back to me going, Gordon, I wish I'd listened to you. Is it too late? And like, well, what percentage of your earnings you can give me? And of course, the answer is absolutely none. I'm like, fine, then I'll give you some advice that's worth what you're paying for it, which is don't even worry about the cost. Just, there's an expression in the US, is dollar cost averaging. Just take a set, you know, I guess in your case it'd be euro cost averaging. Just take a set amount of whatever you have each month, $1,000, 1,000 euros, and just buy. You don't need to buy a full Bitcoin. You don't need to buy a full, you know, I think everything else you can, maybe with the exception of Ethereum, you can get a full coin. Just keep on plowing it in, and don't worry about the dip. Don't worry about the rise up. Just because it's long-term prospects. If you buy into the fundamental story of Bitcoin and Ethereum, but especially Bitcoin, if you buy into its fundamental story, then you're not going to be thrown off by the fact it's 40,000 right now. That's not going to seem too expensive. It's actually quite in line with what it should be at this point. And we'll get into this discussion when we get into mining and everything else. But given the rate of emission of Bitcoin and how that's dropping, and given the increasing institutional interest, and given that there's not enough Bitcoin to go around, it makes sense that it's at $48,000. It makes sense, actually. I think in the short term, it's going to be at $100,000. I think by the end of the year, maybe at $250,000. Now, that's a little bit aggressive, but I think $100,000 by the end of the year is a no-brainer. Just absolutely no-brainer.
So this leads me on nicely to the next topic, because last week I was reporting on a man who'd been around at the beginning of Bitcoin and given 7,002 Bitcoins over a decade ago as a payment for some work that he'd done. But at the time, Bitcoin were only worth a few dollars each. Now, this guy is over there in LA. He locked them away into a drive, wrote the password on a piece of paper. And I was reporting in the news last week, he's lost the piece of paper. And the Bitcoin, which is worth $240 million, because of course we've seen the growth in Bitcoin, is now stuck in a drive. And he's only got 2 chances left, the password, to open it before it encrypts, and it's gone forever. But adding to this, there is $140 billion worth of Bitcoin lost or left in wallets that can't be accessed, according to cryptocurrency data company Chain Analysis. How is this possible? I mean, surely we're talking about now $1 trillion of online currency, cryptocurrency being worth. Is it affected by the fact that there's 140 billion of that it can't be accessed, can't be used, can't be exchanged? It's
sure.
disappeared.
It's a great question. So new Bitcoin is being created slowly, and the rate of new Bitcoin creation is going to keep on go slower and slower and slower. It's called the halvening process, halvening. And what that means is at the inception of Bitcoin, it was easy to mine Bitcoin, and the rewards for mining Bitcoin were huge numerically, even though the Bitcoin itself was very low in value. Hey, Are you with me? that expression.
I'm giving you one of those slightly blonde expressions, and I'm really glad that in a moment we're going to be talking about mining.
Okay.
But please carry on.
In 2008 or 2009, when the network first started up, I don't have it memorized. I probably should, but the amount of Bitcoin being issued was very high. It was not worth much, but it was very high. And then over time, the way the algorithm works is that amount of Bitcoin halves and halves and halves and halves. So the people who got in early had no problem getting hundreds, if not thousands, of Bitcoin. But at that time, it was practically worthless. It was either no value, or a penny or 2 pennies or 3 pennies each. So, if you got something that was worth $70 or $100, you'd be like, okay, that's nice, and not really think about it. So it's, this guy you're talking about, he's one of the founders of Ripple. On one hand, I feel sorry for him. On the other hand, he's not the only one, out there. So does it affect the price? Sure, because the Bitcoin naturally is going up because there's a limited supply and demand is increasing. But there's always the fear that the people who got in early, whether it's Satoshi or this guy or whoever, are just manipulating the market, trying to get it higher so they can dump their Bitcoin, cash out their positions, and go buy their condos in Ibiza, or 1,000 of them.
I was going to say, in fairness, $240 million is probably going to get you slightly more than a condo.
Probably, but a big mansion in LA just sold for $70 million. $250 million or however isn't what it used to be, thanks to our Federal Reserve printing money like it's going out of style. So the more whales, and I'd consider them a whale, the more whales who lose their access, disappear, die, go unconscious, or just whatever, stay quiet, the in some sense, it's better for the market because the supply, the implicit supply is going away, and the threat of someone just turning around and dumping their Bitcoin on the market is going away.
Well, just before you move on there, let me just ask you a question. If then this gentleman manages to unlock his hard drive and access this 7,002 Bitcoins and dumps that onto the market, how much is that going to affect the market?
It may do, well, first of all, I really doubt he would sell it all at once. He would probably sell.
But let's say he did. Let's say that he decided he wanted that Bitcoin.
I think at most, it would tap it down for a week at this point, because Bitcoin's so big that it's not really 250 million. It's not like that much. Even if you dumped it on the market, I think it would be a blip, because you know what? It'd also be like I think there'd also be a collective. He's not that big, but to the extent that it landed on the market tomorrow, there'd be a collective exhale, because we'd be like, okay, well, at least that whale is taken care of. One less whale we need to worry about. Now it's on the market and going out there. In real life, if he were to unlock this thing, or he got some Israeli tech firm to unlock it, which he probably is trying, if he managed to get access to it, almost certainly it would not be sold on the open market. Almost certainly it would be an over-the-counter transaction between him and some institution, and we'd never even know about it. We'd see the wallet move, or maybe he would just hand over the wallet physically to this big institutional buyer, but we probably wouldn't know about it. But to take your example, if he dumped it on the market, that's not such a big deal. I mean, I think at this point you'd have to dump $1 billion worth of Bitcoin in the market for it to have any real impact. You know, the neatness of Bitcoin is you don't need to custody it with someone else. You have control of it. The government can't really seize it. Your ex-wife or ex-husband can't get the court to grab it. You know, it's very beneficial that way. But then again, we have banks for a reason. You know, you don't necessarily really want to keep all the cash underneath your mattress. I mean, Bitcoin's like keeping the cash under your mattress and then complaining when your house burns down and like, oh man, all my cash was under my mattress. What do I do now? I feel, like I said, I feel kind of sorry for him, but I got my own problems, so I can't get too sympathetic. You know, it's like, okay, well, sorry, you know.
Gordon, I think that has to be the quote of the interview. I feel sorry for him, but you know, I can't be too sympathetic. I've got my own problems.
Yeah.
Fair enough. Let's talk about mining, because obviously mining is the essential part of crypto that most people don't understand, and myself also not fully. But this is currency being released as a reward for solving a mathematical problem. By mining, you can earn cryptocurrency without having to put any money down for it. Bitcoin miners receive Bitcoin as a reward for completing blocks of verified transactions, which are added to the blockchain. Now, all of this sounds complicated. And you mentioned yourself just back then that in actual fact, the rate of Bitcoin mining has slowed down. And the last time we spoke, you mentioned that a Bitcoin was being mined.
Let me say one thing just to correct what I may have said. The new blocks are being mined on average every 10 minutes, and the network is designed to have that happen every 10 minutes. I wouldn't say that mining slowed down. In fact, if anything, there's more miners doing what they're doing than there ever were before. It's that the Bitcoin reward for successfully mining a block keeps on dropping by half at set intervals every few years. So I just want to be careful with what I said. So another way of saying it is the rate of emission for new Bitcoin keeps on dropping, but the actual activity involved in making that happen is the same. And I see the puzzlement on your face. So just imagine this. Imagine there's gold in the ground and it's a new mine. So you bring in one tractor, and because there's so much gold and no one's gone there before, each day you can pull out a ton of gold. Well, that's great, right? And everyone's like, wow, this is cool. I'm going to bring my tractors also. Okay. And they all start competing with each other. And there's only like one, you know, there's only one way in each time. Okay. So even though there's more miners, they maybe get a little bit of efficiency, but they're all still pulling out gold every 10 minutes just because that's the most efficient speed that they can get it out. Now, you dig for a while and you go deeper and deeper, and it's harder to mine after a while. The gold is buried deeper in the ground. It's more spread out. Like when you had the virgin mind in the beginning, it was easy, but then it got a little bit harder. Well, okay, so fine. The next time, instead of pulling out a ton of gold, you pull out half a ton of gold. Okay, everyone's still putting in all the effort. They're all trying to go in there, but it's harder. Okay, and then time passes, and the gold's even deeper in the ground. So the next time you pull out gold, it's a quarter of a ton. Okay, fine. Now, suppose this is the only gold mine in the world. Are people going to lose interest in mining that 1/4 of a ton? I mean, that's not worth as much as 1 ton was, right? Well, if this is the only gold mine in the world, they wouldn't lose interest, because that means that gold is becoming increasingly scarce. So yeah, it was nice to get that 1 ton in the beginning when gold was plentiful, but now it's harder and harder to get gold. That 1/4 of a ton sounds pretty good. It's just supply and demand, and you dig some more, and a couple of years, later on, you can only get 1/8 of a ton. So think of it that way. It's you're digging deeper and deeper into the Bitcoin mine, if you like, and it's getting harder and harder to get out the gold. But because this is the only source of gold on the planet, i.e. the only source of Bitcoin on the planet, the fact that it's less and less and less actually makes it more desirable, because there's less of it to get, and you better try harder and harder to get what's left.
Gordon Einstein, you have the most amazing way of making complicated things sound very, very easy to understand. Thank you. It's a
Thank you.
Public
I'm going to
service.
take this one. Let me throw this out. So imagine those whales. Thank you. I appreciate that. Imagine those early whales who were digging for gold when it was easy, when it was right there on the surface, and you could just kind of grab it. Imagine in a moment of Zen stupidity, they're like, this gold will never be worth anything. I can pull out a ton in a second. It's no big deal. Throw it away. Or they die, or they get divorced, or they lose their key or something. Doesn't that make the gold in the ground worth far more? Because all that gold that had already been pulled out, when there's a lot of it, is gone, lost. So it's like, well, wait a second. If that gold is lost, that 1/8 of a ton is looking a lot better, because all those hundreds of tons over there are off the market. I better go get what's in there right now.
Yeah.
So that's kind of, I guess that's a sort of a mental metaphor for thinking this through.
So we have the analogy, and it makes it very simple to understand, which is great. However, obviously, we're not talking about a tangible thing as in gold. We're talking about a digital asset. And the mining is not digging for it, it's problem solving. So I got a number of questions relating to that. And you talked about the emergence of the blockchain and crypto right at the very, very beginning of time, and a decade ago or so. So explain this to me then. Who established this? Who came up with this idea? Because you also mentioned that there's not somebody you can go to, as in a government or a bank, to talk about this issue, to discuss this issue, because this is what, as part of the conversation about the volatility of crypto. There's not someone that you can just go to and say, hey, listen, why has this happened? Because it is an independent and completely ungoverned as in government entity. So where did it come from in the very first place? Where did this source originate from?
So there's someone who went by the name Satoshi Nakamoto, and it's probably a pseudonym. It may not even be one person. It may be a team of people. We just don't know. And what Satoshi did, God bless him, is he looked at all the various attempts to come up with a workable, stable value currency over history, both public and private, both government and entrepreneurial. Saw how what worked, what didn't work. Of course, nothing really worked, but he saw the elements of what worked. Looked at a bunch of technical fields, and like most clever people, didn't necessarily invent something from scratch, but he combined things in a unique and clever way to finally solve the traditional issues with digital currencies, which is the double spend issue. Because the moment I have a digital dollar and I pay you for something, who's saying that I'm not going to, it's like an MP3 of Britney Spears. I can give you a copy, I can give my brother a copy. I can make infinite copies. Well, if I can make infinite copies of money, it's not worth anything. I mean, part of the value of gold is it's scarce, it's scarcity. And so Satoshi figured out how to create digitally imposed scarcity, or scarcity despite the digital nature of things. And no one's ever spoken to him, no one's ever seen his face. He did this entirely through news groups like public bulletin boards. You can actually go on Amazon and get the writings of Satoshi and read all the stuff he wrote. And he came up with sort of the philosophy of this, explained why it would have to work. And him and several earlier developers of Bitcoin came up with the first sort of proof of concept code and developed it and put it out there and stood up the network and just started operating it. And the first several thousands or much more of Bitcoin were mined by Satoshi. And then Satoshi disappeared. He signed off. He didn't actually say he was signing off. He just did his last post and then was quiet. So I don't know if he's on Mars waiting for Elon Musk. I don't know if he's dead. I don't know if he's like the wealthiest person on the planet, just waiting 5 more years, and then he's going to show up like, Christ returning, pardon my religious reference. But we just don't know who he is. We literally know this person through, I'll say his, though we don't know it's a him. We know this person through his works, his words and his works. To me, it's just quite stunning. I mean, we have a $1 trillion thing that did not exist 12 years ago, or at this point, 13 years ago, that is entirely based on the written communications of an unknown person. It is a freaking science fiction novel. Okay.
But doesn't it worry you?
No, because the great thing about the code they wrote is it's all open source. There's no backdoor. There's no trick in it. It's been looked at by 1,000 eyes. The only danger to Satoshi showing up again is all those Bitcoin that are Satoshis in his wallet. We worry about a whale dumping them on the market. Okay, so he dumps them. So Bitcoin crashes to 5,000. Okay, and then it starts going back up again. Big deal. Now, Craig Wright from Bitcoin Satoshi Vision has a very doubted claim that he's Satoshi. And he's claimed that he has the keys to the Satoshi wallet and that he was going to crash the main network. And he said he was going to do this a year ago. Well, a year came and went and he didn't crash the network. This is something that was slightly overhanging Bitcoin, BTC for a while. Let's let Satoshi show up. I want to thank him for my new career. He deserves all this money. Good for him. If he dumps on the market, fine. I'll buy more Bitcoin.
So, listen, we're talking about this real science fiction story, which is phenomenal. It's absolutely incredible. But let's talk about mining for a second, because even this is quite hard to grapple with and to get your head around, because Bitcoin are released as these problems or transactions are created or solved or whatever. Explain that to me just for a second, because this is all relating to the blockchain and the security of the blockchain, but it's actually quite hard to make that into a tangible explanation.
Right. So here, I'll break the fourth wall again. So all Bitcoin purists watching this, I'm purposely simplifying this a bit. I know it's not quite this, but I'm going to do the 80% version. We're going to do the Pareto.
Some of us are grateful. Thank you.
Okay, so no problem. So Bitcoin purists, spare me your comments. Okay, here's the idea. Like we discussed last time, each block in the blockchain is like a page in a ledger, like an accounting ledger, right? And you started with the Genesis block, if you can imagine, like at the very first one, which had a bunch of transactions on it. And then you add another block on top of that, another block on top of that, every 10 minutes or so, right? And hence you get the blockchain height. How many blocks has there been? There's been 1,000 blocks, and the blockchain is 1,000 blocks high. Now, each one of these blocks, before it's attached to the blockchain and everyone agrees that it's real, we need to prove it out somehow. How do we know that what's on there is right? How do we know that these transactions are correct? How do we incent people to try to figure that out? Well, there's some basic rules, like, if you're spending Bitcoin, you have to show that you had it in the first place. That's basic verification of the block. But suppose that all adds up, but then how do you incent people to actually add it to the blockchain? Well, again, each one of these blocks, which is unique by definition because it all has different transactions and happens at different points in time, is the basis for a mathematical problem. Okay, and the technical term is that it's a basis for, we talked about this, reversing a hash. based on this number. This block is an input into a hash. It produces a number on the output, and you need to reverse that process. And again, Bitcoin purists, I'm putting this in alternative language. This hashing problem is great because you can increase or decrease the complexity of this by changing some variables. And that's how you can always kind of, this, we mentioned the last time, this network always self-adjusts. So it averages on 10 minutes per block. If there's too many miners, if there's too many trackers trying to pull out the gold, okay, they'll make it harder. The system will automatically put the gold deeper in the ground and say, okay, we're gonna make it a little bit harder. So you can't get this out faster than 10 minutes. If all the trackers get bored and go, oh, this is too hard, and they go away, and there's fewer trackers trying to pull the gold out of the ground, the algorithm goes, oh, wait, we want people to stay interested. It moves the gold closer to the surface, so it's easier to mine. So it's always like it's regulating the difficulty of the mining process so as to control people's incentives so that this 10-minute emission rate seems reasonably stable. And then you asked another good question earlier, which is what happens when all the Bitcoin is mined in approximately the year 2100? Well, you don't make money just by mining blocks. You make money by processing network transactions. Like whenever I send Bitcoin from myself to you, a very, very small portion of that Bitcoin is going to be paid to as a network fee. Now, it is very cheap, but it does, you know, if I send you one, you don't get one. Like one little bit of it goes away and gets paid to the network that's processing it. So as Bitcoin goes up in value, even though you're getting paid a very small portion of a Bitcoin, it's not nothing. I mean, if Bitcoin ends up being worth $1 million and you get 1/10 of 1 cent, sorry, 1/10 of 1% each time you process a transaction, that's not bad for just passing a few electrons back and forth.
Well, if the cryptocurrencies are worth $1 trillion right now, then anybody who's involved in that, even if they're making a very small percentage, they're making a very small percentage of a huge amount. I do think that, you know, you mentioned there, if you sent me a Bitcoin, you know, we could always try that. You're very welcome to send me a Bitcoin. I would be fine with that.
I have no doubt. We'll go to Dubai. I'll take you shopping with a Bitcoin. How's that?
That would be great. Thank you very much
That would
indeed.
be a lot of shoes.
Gordon, thank you so much for your time today. Absolutely love talking to you. Love you explaining everything to myself and anybody else who's watching right now, who is interested and fascinated by Bitcoin, blockchain, cryptocurrencies, and everything that is buzz right now. So thank you very much indeed. Looking forward to speaking to you again very soon.